Hi, my name is Neil McIver of McIver Capital Management at Canaccord Genuity. And today we're going to talk about the greatest threat to your portfolio and to your wealth. And that threat is you. The study of behavioral finance is fascinating. You can go out to UBC and get a degree in it. You can even get a master's degree in it. But really what it is the study of why we as humans are stupid. It's the study of why Las Vegas continues to get bigger and why people continually make poor decisions when it comes to their finances. Behavioral finance identifies a number of biases, and each one of those biases affect the decisions that we make as investors and negatively affect the outcome of the portfolio. Let me identify what some of those biases are, and as I do so, you might identify some of these in yourself. Overconfidence bias. Overconfidence bias is a bias in which we exaggerate our own abilities to invest and how good we are. For instance, we might buy Apple and it goes up, and immediately we think that we're geniuses and we're very good at investing, and we might go out and buy more Apple or more companies very similar to that. Confirmation bias. Confirmation bias is effectively an individual who begins with a supposition that they have about the market or the economy, and then they go out and they look for information that supports that, and then they invest in that way. Rather than looking at everything in an objective perspective, they simply look to confirm what they already believed in the first place. Anchoring bias, or anchoring. It's fascinating. Effectively, what it does is people become anchored to an initial piece of information that they may have seen or heard. So imagine you go into a t-shirt shop, and when you go in there, the first t-shirt you see is priced at $800. Next to it is a t-shirt that's priced at $100. You'll believe at that point in time that the t-shirt that's $100 is inexpensive compared to t-shirt number one. But in fact, there's plenty of t-shirts out there that cost $10 or $15. What's happened is you've been anchored to that original piece of information. Herding or herding bias is just a simple fact about humans that we feel much more comfortable when we're in groups. We feel safer. So if everybody's buying into one particular stock or one particular area, then we feel very comfortable to go in with the crowd. The whole crowd can't be wrong, can they? Or conversely, if people are frightened and they're leaving a particular part of the market, then we must get out because we have to be with everybody else. It's very typical, and it can lead to very negative impacts inside of people's portfolios. Recency bias. Now, this is one that typically I see on a regular basis. What this results in is individuals placing too much weight on what's happened recently inside of the market. So let's say gold has had a bad 2 or 3 or 4 or 5 years. People will typically think that's a bad thing to own inside of a portfolio because it recently hasn't done well, ignoring the fact that the long-term rates of return for gold have been fantastic over the last 100 years. Home bias. Now, this is a very typical one for Canadians. We like our country. We have a tendency to invest here heavily. So people's portfolios end up having far too much in Canadian equities or in one asset class, which increases the volatility inside of the portfolio and decreases the long-term rate of return. We typically buy what we know as opposed to buying properly diversified portfolios. The work that we do at McIver Capital Management is the antithesis of falling prey to those behavioral biases. We use something called modern portfolio theory or modern portfolio construction. And what that does is it uses math and science to avoid human foibles and the problems that we all have as individuals when it comes to making difficult financial decisions. I'd like to send a shout out to the great Matt Ehrenreich of McIver Capital Management, who put together that list, as he is actually creating a textbook on this very subject. So thank you, Matt. Thank you for watching, folks. Please click below for an in-depth video on how we invest at McIver Capital Management.